Hi, fellow traders. Well, we're off and running on a brand new week, brand new month, and it is wintertime in South Carolina, in Columbia, South Carolina. It's 70 degrees outside. I'm riding around with the top down, drinking a milkshake, even though I shouldn't be drinking a milkshake, but just felt like the thing to do today. And after I came back from lunch, things just weren't really trading well. Um, I didn't really make any moves after lunch. And I sat outside on the deck and listened to some Mark Douglas and you'll see, I'll explain it when we go through the recaps on why I did that, why I needed a refresher. But it was just a beautiful day. Beautiful, beautiful day. Could not spend it sitting inside. Now, that's why I have a mobile setup that I can take out on the deck if I want to. But I just didn't. I just sat there and watched and listened to Mark Douglas on my phone. But it's going to have some beautiful weather these next couple of days, and that's what I'm going to do. Got a lot to cover today, so we're going to jump right into it. Just want to remind you guys, swing trade classes do start this week. We'll do the last tax class, which is just talking about a budgeting thing that I do. That's pretty much all that's left. We'll wrap that up on Tuesday, and then Wednesday we start the new swing trading class. Starts from the fundamentals, the foundation, because without that, you're nothing. Now, a lot of people come in and they just want to trade. They don't want to learn the fundamentals, the foundation. They just want to be told where to get in and where to get out. That's not what I do. And, I make that known right up front. I teach you how to do it so that wherever you are in the world, however far away from me you are, you will not need me to make money. You can do it yourself. If you go to the Maldives, if you go to the Bahamas or anywhere in the Caribbean, you can sit there with your one little laptop, and I don't care how sketchy the internet is. It doesn't take much to get into a swing trade and set your target and your stop and log out. It doesn't take nothing to do that. It doesn't take a whole lot of internet to do that at all. And so it's really important that you learn the foundation, that you have a foundation you can always go back to. But it's starting this week. If you want to get in on it, all you have to do is join. I don't sell classes. They're free to all of the members. So it doesn't matter what membership you have. Nobody is left out of anything. So if you have any questions, just email me, ed@AverageJoeTrader.com, and I'll be glad to answer any questions for you. All right. So we're going to get into last week. I didn't get a chance to do the recap on Friday. Ended up doing some stuff, not really coming back after I picked up my son, and forgot that I had a trade on, which we're going to talk about here in a minute too. But I got back too late, didn't get a chance to do the video and all that good stuff. So gonna recap last week, close out last week, and then we're gonna do this week. All right, so CAT, this was kind of what my main focus was. We were working our way down. Everything was looking pretty good. Even though we had a big sell-off candle here, I thought we had enough room to keep going. I mean, this was not a bad setup. It triggered an entry. I got it. And even though this pre-market low right here was sitting right here, I felt we had enough momentum to pull through it and where I could take some profit. And even if it held, I would be able to, work it out. So I got in and it reversed pretty much right after I got in. and came up and stopped me out. Now, I messed up here. I miscalculated my max loss stop. I didn't realize it until I was doing my journal that night and was laying everything out. And when I saw how much I lost on this, I realized I miscalculated it. Now, I do have dyslexia, do have dyscalculia, and I have a system that allows me to double check everything. But for some reason, either I skipped it, I don't even remember now. But whatever the case was, I miscalculated this, and I had twice my max loss built in here. And somehow it just got messed up. Now, the strategy didn't work. Okay, it wasn't that the strategy was bad. It wasn't that I made a mistake entering. The strategy is one that I entered, it set up, it failed. So this is chalked up as just a strategy failure. And the mistake I made was on calculating my stop. So that was CAT. Now, what's interesting here is I went back and I traded CAT in the January earnings last year. This is the chart from CAT last year on earnings day, earnings morning. And I actually made $536.04. And I actually lost over 500 on CAT this year. So it was crazy. But I always like to kind of go back and look to see if I did trade the same stock on that earnings morning. And it just so happens that I did. And a lot of times I do trade the same stocks year to year. But the market was a little different. I always go back to kind of see what were the market conditions back then, what was it doing, what was the big news catalyst out at that point, at that time, and just kind of compare notes. So this is one of the other parts where journaling is really, really important, because you could always go back and pull this up. So I have a file. I keep electronic files. So all I had to do was go back to that date and pull it up, and I could see what I traded. And this was that. All right, so Roku, this one made a textbook opening range breakdown. The only problem was it had no volume at pre-market, and it had no gap. So it did make my watch list. And I always have Roku up, but I had TVIX in its place. When I flipped over, we were already in this candle here, I think. So I just waited, and when we got a nice rejection here, I got in. I didn't want to anticipate here getting in. I waited until we made a new low here relative to this candle. I got in. I had to withstand a little bounce, but this is normal, especially on Roku. And got to the first target, came down, bounced, took it off because I thought we were going this way. So I went long and ended up just stopping out because I realized I was just going back and forth. So it got short, and it was crazy. And I ended up going back long here. After this short trade, I got back long here, and this is the trade I forgot about. I forgot to get out of this trade. When I came back, I couldn't get out because it was done. Now, I couldn't get out the trade. So I had some sleepless nights over the weekend worrying about the market falling off the face of the earth, because of what's going on. And it was really crazy. And so it really messed me up for this morning, as you're going to see here in a minute. But it was really, 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 really scary. But I ended the day 63.92. I honestly thought I was up about $200-300. I honestly thought that, because I didn't realize I had had lost twice what I should have on that first trade. So I was really shocked to see that I only made 63 bucks on Friday. But that's where we ended up. And you can see for the week, I ended up 539.93. Actually, this is the wrong price. My total is wrong. 2026 for the month. So I can't change that now. But for the month, it should be $2,000.26. I never changed it from here. This is where I was at the end of the week 3. But I didn't update this, and I kind of messed that up. But I'll update it and put it on the website. But you can see, not the week I wanted to have, but I did manage my losses. Now, some of these good days, like this day and this day, I mean, here, I kind of masked my loss. Like, I had 2 losses here, but I had 1 good trade. Didn't quite get the green. Same thing here. Same thing here. I had 2 wins, but this 1 loss was just a little bit massive. If I have 2 losses, this is kind of the day I would expect. So I wasn't really out of whack on my losses. Even though I took too heavy of a loss this day, and a couple of other days I did take a little too heavy of a loss, it wasn't so bad that it really crippled me. And so to end this week with $2,000, end this month with just over $2,000 is not bad at all. Now, here's a weekly P&L. I don't typically use this, but I do plot it because I use this data whenever my equity curve starts to look messed up. Then I come back and I look at this and I start to look at how many red down arrows do I have. So I don't have red weeks, but if I'm consistently losing money or making less every week, that could show a potential problem. It could be an issue with my execution. It could be that the market is really starting to turn and I may need to adjust my strategy permanently. You never know, because our strategies, the big money guys, they know our strategies. They know how we trade. They know where we're going to put our stop, where we're going to put our profit targets. They pretty much have a good idea. And so it's up to them to break us. And so if there's something that really changes, just like a couple of years ago, VWAP was king. I mean, I was loving trading off the VWAP. The bounces, the VWAP fades, I was all over the place. But guess what? Everybody else was too. Now, this doesn't work anymore. That strategy is pretty much gone. At least the way I traded it. So, this kind of gives me an idea of if I really need to start looking at what I do on a week-to-week basis. But like I said, it's my equity curve, which we're going to look at in a minute, that gives me the direction I need. That tells me if I'm going in the wrong direction. Now, you can see I've already made more in one day than I made last week. So unless something catastrophic happens, I'm going to have another green up arrow for this coming week. But that's all we want to see. And I don't really care whether I have red arrows or green arrows. None of this really matters. But what really matters is my equity curve. And even though I had weeks where I didn't make as much, look at my equity curve. It's still going in the right direction. And as long as it's going in the right direction, now if it flattens out and it stays flat for a period of time or it starts to go down, then we're going to have a problem. And that's when I'm going to go back and start looking at this and saying, well, how am I looking week to week? And if I'm losing money or I'm going down week to week, I'm not making as much this week as I did the previous week, because what I'm doing is I'm staying consistent. I'm trading the same way every day. I'm not changing anything. I'm not making wholesale changes. I'm executing my strategy every day in the market. And that's what I'm trying to demonstrate. What I'm trying to show you guys is this is how to do it. This is how you're consistent. You know, making a big win, it doesn't mean a damn thing if you can't keep the money in your account. It doesn't. So you got to learn how to trade. Some people are hooked on these big wins. You know, they're hooked on instant gratification. And they're hooked on the big wins, but that's what they're hooked on, that excitement. And they don't really care about anything else. But before you know it, all your money's gone. So you got to be consistent with your execution. So from now on, we got the first month locked in. So from now on, I'll be sharing this week to week. This will be posted on my website so you could keep up with, you know, where I'm going. So all of my trades are going to be recapped. If I miss a day, I'll come back and redo it the next day. You know, I'll keep you up with it. So you'll get to see every trade. If you're not in the community, if you're in the community, you get to see them live. So, but I want to make sure you guys see everything that I have. All right. Let's come back to this. I don't want to go too far away from the Roku trade. Now, this is what happened this morning. Now, I held Roku overnight, over the weekend. Told you, mentally, it was very draining. It was very stressful. Here's the problem. I became convinced that I knew what was going to happen before it even happened. I was convinced that Roku was going to sell off at the open. I was convinced because we were trending down here now. You know, we made lower highs. We made a lower low coming into the open. So in my mind, we were going to sell off. And I had no plan. I had no plan other than because I thought it was going to sell off. And I was going to be ready to take it off as soon as it showed signs of, you know, bleeding off. So we opened here and we immediately started selling. This was all red when I got out. And instead of waiting a minute or waiting 2 minutes, in my head, I knew what was going to happen. That's a cardinal sin. You know, was that I knew what was going to happen next, and I traded based on that, and I cost myself a ton of money. If I hadn't got out here, I had a good 5 points that I could have picked up today on 300 shares. It's $1,500. Now I would have scaled out, but so it wouldn't have been that much, maybe around 1,200. But the problem was, you know, I assume, whenever you think, assume, or believe you know what's going to happen next, you tend to make mistakes. And that's exactly what I did here. So no excuse on this. This was all a big mistake. And then when I got out and the thing ripped up, how do you think that made me feel? You know, I felt really stupid. I felt if I had a jackass hat, I would put it on and walk around the house. I'd probably walk around the block with it on. That's just how dumb I felt. And I didn't want to get in this because I felt I would be chasing it up. And I just convinced myself not to do anything with this. That's just how bad my mind was with this. All right, so I closed that out. Didn't really make the money that I wanted to make on it. And so this was another stock we had on watch. So we waited about 15 minutes, and this one was moving slow. So I'm like, yeah, this is a slow and easy trade. This is going to be easy. I can get a quick, a little easy win. Try to right the ship. Oh, but hell no. I didn't calculate the RSI right. I mean, the ATR right. So I went in with 500 shares instead of 300 and ended up getting stopped out. Right, I got stopped out and the damn thing turned around and came back. Hit my max stop and came back. And so I got back in again. And it really tried my patience. I created more drama for myself this morning than the market did. So it was all on me. All on me. So I can't blame this. This wasn't a failed strategy. The strategy worked. This was failed execution. So today, it was on me. And so what I'm going to be doing is not only am I going to track my accuracy, now we're going to track accuracy, and then we're going to track whether the strategy failed or not. It's going to track whether it was a strategy that failed or was it the trader who didn't execute worth crap. And that was me. I didn't execute worth crap. So I waited. We got in again and was able to take profit here. And then, closed out the rest break even. So I felt pretty good. And then getting ready to go to lunch, I told you guys, I'm looking for this. Once we get over the opening range low here, once we get over that, I'm looking for it to blow through VWAP. And so right when we broke the pre-market low, I got in and we broke through VWAP, but we held it. And we held this level here, this daily level. And finally made my target. And just kind of held it the rest of the day. It didn't go anywhere. Just traded sideways and then ended up closing it here at the close. But that was that. So pretty decent recovery. I know why I did this. I was an emotional wreck. So I had to get out. And then coming back, and through all of this, I was just sitting outside. I was sitting outside enjoying the weather, looking at the birds on my bird feeders, and just listening to Mark Douglas, because a lot of the stuff he talks about, a lot of the mistakes that I made the last 2 days, he addresses directly. So that's why I was out there listening to him. I think I got my head screwed back on straight and ready to go for tomorrow. And so today, 769.19. Thanks to about $400, I think. It was just over $400 if I calculated it correctly that I got on Roku to start with. Gave some back on that first trade. We gave most of it back on the first trade. And then started gathering it back in. But pretty pleased with how I finished the day out. And ready for tomorrow. Ready for tomorrow. All right, so real quick, we'll go back and talk about what I was going to share with you. Now I told you I'm going to be using TD Ameritrade for the swing account. Doing that. It's not as close, but it's not at over PDT yet. We did a hell of a lot better than I thought I would this last month while I was playing with this. But as I learn things that we need to be aware of, I'm going to share them with you. So we're going to start using this account with the swing trading class. Since it's a margin account, you can open up a margin account with TD Ameritrade for $2,000. You can open up a cash account for a hell of a lot less, but you're limited to what you can do on a cash account. Now, unless you're trading these $2 stocks and you're trying to do that, I would not recommend that with TD Ameritrade. This platform is not designed to trade the momentum stuff, the gap and go stuff. It's not really designed for that. And you're going to have a hell of a time sometimes at the open when the volatility comes crashing in. So I never use it for that. I do slow trend following trades. So I never had that problem. And I've been using this for a month. And over a month. And haven't had any problems whatsoever getting in or out of trades. Nothing. Because I'm never in that high volatility moment, and I never have to deal with that. But that's why I'm using it. You know, a lot of guys don't want to go offshore anymore. They want to stay as a U.S. broker, and this is an option. What's the other one? I can't think right now. But a lot of the U.S. brokers, I'm not sure what their minimums are, but I know TD Ameritrade, the minimums are low. And for the average person, you could open up a margin account. Or if you can just put whatever you have in as a cash account and then just deposit. I mean, that works too. Until you get that, then you can open a margin account and you can keep going. But what I wanted to share with you on this, if you look at this XLRN trade, you can see I had 450 shares short. And this was a stock that ran up to like 100. It gapped up from like, $35, $40 all the way up to 100 aftermarket. And we shorted this aftermarket in our day trading account. And no, it was the IB swing trade account, the one that had BA in it. We shorted it in that, and we made a couple of bucks on that. But the next morning is when I messed with this. I thought we were coming all the way in, so I was going to short it and hold it all day, which basically what I did. But what happened was I got in two different orders. I got in here and I was like, no, I could go in a little bit heavier. I want to go in full size and work this thing out. Because there again, I convinced myself I knew what the hell was going to happen. And that's where my mentality was. So I got in, and I didn't realize that TD Ameritrade counts this as two separate trades. Even though I'm adding to my position in a trade that I've already taken, that I've not taken any profit on, I'm just adding to my position. That counts as two separate day trades. So once I closed out the position, I lost 2 day trades like that. So why are day trades important? If you take a swing trade and you burned up all your day trades, you won't be able to get out of it without being flagged as a pattern day trader. And if you're flagged as a pattern day trader, you either put in enough to bring your account to 25K, or you're locked out of your account for 90 days. Now, they will, from what they told me, they'll forgive you twice. Some people said they will only forgive you once, but the rep told me, and when I was talking to him about it, he said you get, 2 freebies, but you don't want to take advantage of it. And that's why I didn't trade today in that account. And we had 3 or 4 of our swing setups trigger an entry. I couldn't take them because I didn't have a day trade, and I didn't want to burn it. and I want to use that free pass for a real emergency. So I just sat on it today, and we'll start back in tomorrow. I should have these 2 day trades back tomorrow and be ready to go. But it was crazy. It's crazy how they have this figured out. Even though it looks like this, like one entry for 450 shares, and this is, some of these are part of the same order. Some of these are all part of the same order. It just got split. But like, here's one, and then here's another one. So I covered 250 here. Here's 100, and then this is the second 100 order right there. So it's just something to be aware of. I just wanted to share that with you so you could kind of be aware of that if you're using TD Ameritrade or if you're using another broker. Some people have told me that IB doesn't calculate it that way. I've never dealt with IB or Speed Trader or Lightspeed or anybody like that under the PDT, so I wouldn't really know. But all I can tell you is this is how TD Ameritrade figures that. And if you're trading with them and you're watching your day trades, just be careful. If you add to your position, that's what's going to happen. All right, so that's going to do it for me today. I hope you guys have a great rest of the day. And I'm going to go out and try to enjoy some more of this weather before the sun goes down. And I will catch you guys in the morning.